Uranium friends. So April 4th, we're looking at URA right now. April 4th, 2024. It was a time when all of these guys were coming in and saying, oh, it's a Wyckoff accumulation phase, blah, 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 blah. They were looking at shorter term time frames. Some technical analysts who call themselves technical analysts, regardless of that. So, and I posted this. I said, listen, technical analysis, zero bias, understands conflicting signals. While bias permeables are seeing Wyckoff accumulation as an early look at the possibility of weekly distribution forming, even though it's a monthly cup and handle, right? So you zoom in on this, and this is April, right? It's the weekly candles, right? It's a weekly chart, okay? So this is April when I made this conjecture. I made this thought process that it started to look like the beginning phases of a Wyckoff accumulation, distribution rather. Sorry about that. Others were saying it was accumulation. I was saying it was possibility of distribution. So let's look. What does it look like now? Well, it's playing out as a distribution. Now, I am by no means a Wyckoff expert. I would think that Benny from East and West probably knows more about Wyckoff and stuff. He studies that stuff more than I do. He's a waiver and all that stuff. And I'm sure these things are related in some sense to Wyckoff and Elliott waves. But, here we are. And this was the call out, right? Right here. This is right when I said, looks like possible distribution, right? Now we've gotten your up thrust. Okay, so you're in phase B, you're getting your up thrust, right? So then we have this distribution, this chop zone here, which kind of looks familiar here, right? And now we're starting to get this breakdown in the beginnings of phase D. If in fact this is a Wyckoff distribution event, I don't know if it is or not. Again, I am not a Wyckoff expert by any means, but you can start to see this. And if you start to pattern it out, okay, well, it makes some sense. So, if a Wyckoff guy, girl, person, whatever, is looking at this and early recognizes it, well, you see this white line I put here. I mean, that is the white line. Okay. So it rejected there as it did here, as it would here. And now we're just in chop distribution, right? So if you believe that this is a Wyckoff distribution event on this weekly chart, you should not be surprised if there is further downside and the possibility of much further downside, right? So this Wyckoff distribution schematic basically denotes that some major support finally gets lost. And as it runs down and wipes everybody out and then starts to turn into an accumulation phase. That's what these Wyckoff cycles, events are all about, right? So, where's our major support that could potentially be broken down? What is this starting to look like? I mean, to me, it's starting to look like we're here, actually, to be honest with you. In this part of the Wyckoff distribution phase, that's where I would think we are. I don't know. It could be that it was all of this, and we are definitely like right here, right now. It's a possibility. I'm not saying that it is or it isn't. I'm just saying that this is something that I am personally keeping an eye on. Now, I've been criticized many times over the past couple of years because I buy insurance. And what's my insurance? Well, I've got $10 and $15 URA puts that are dated out into 2026. That's my insurance policy. They were dirt cheap. They're still dirt cheap. They're hard to get. Liquidity is low. Usually I just put a stink bid in, and every once in a while they fill. I get partials, and I just build up that position. And as time goes on, I will start doing that with the 2027 euro puts. Sometimes I move up, sometimes I move down. Regardless of that, that's my insurance policy in case of this. in case of the black swan event where there's a possibility of a nuclear accident that destroys the entire sector overnight. Okay, those things are possibilities. So, just as much as those are possibilities, this is a possibility of a Wyckoff, weekly Wyckoff distribution event. That is all I'm saying on this. I don't know. I am not an expert. I am just watching it develop, and I've been tracking it and talking about it since April 2024. Here's the proof. Okay, so there's a lot of people out there that are going to criticize me because they think I'm a short-term trader. I am. I'm also a long-term trader. I'm also an investor. I just play the game a little bit differently because I have 3 decades of experience doing this type of stuff. It's just that simple. So time will tell if this pattern plays out, if this cycle plays out. I don't know. As I see it and I look at it and I review it, it looks more and more like it's doing that. We do know, without beyond a reasonable doubt, that this is a major level, this area. So let's just say it's about, I don't know, 17, 18 to $20, right? 18 to 20 is a major, major area for URA. And we will look at it right now just to see, just from a, I don't even know what the heck is going on. Okay, this thing. So just from a perspective of a chart, is this area the level? Yeah, it sure is, right? So this is the spots we don't want to lose. So if we do see this Wyckoff distribution on the weekly chart, we do want this to hold. If it doesn't, it's just a pure problem. So what's the good stuff? Let's get rid of some of these things. All right, what's the good things about what's going on here? So if you follow me, I do use Fibonacci's a lot. That is good for long-term trading people, Fibonacci's. We had a perfect, not a perfect, but a darn good bounce off of this, what they call the golden pocket, which is the 61% retracement. You often see bounces on the bear side and the bull side in that area. Okay, it's coinciding with as it starts to run into this volume support, and it's coinciding with a lot of action in here. Good bounce. That's on the log scale. All right, on the linear scale. All right, it's a good bounce there at that place too. A little bit of an undercut, but it's linear, right? So this is a solid bounce. It's a solid place for a bounce, and if it loses this level, it's problematic. And then it just indicates that we're coming down further into here. So then we have to start looking at this 18 to 20 area, 21 area. That's where we have to start looking if we lose the level that we just had. So, and you look at this and you say, okay, well, yes, guess what? Today took out yesterday's high. So in technical analysis terms, let me just try to get this better. In technical analysis terms, this daily low is set for now. Okay, that doesn't mean, oh, the bottom's in. Doesn't mean that at all. But we start to look at the historical RSI now. So we're trying to find. What I'm trying to do is I'm trying to find points in favor of the bulls, right? So a historical place, RSI wise, for it to bounce. You had a little bit more of an undercut there, but not much. So URA bounces at this historical level. And that is quite the capitulation, right? So let's just see the volume. I mean, there's nothing overly special about the volume, by the way. The capitulation volume was, what is it, Friday? Yeah. So you had some good capitulation these 2 days. And this is a good dip buy. All right. So it's looking more and more like weekly distribution on the Wyckoff scale. But this is a good bounce, and that's how I'm playing it. I'm playing the sector this way right now, and I'm being a little tight. But I have to say, that's where we are. And I will say I want to look at URNM too because that had a great bounce, and it's the same type of deal, right? Golden pocket bounce, like a perfect one on this weekly golden pocket here in log scale. Now, if you look at linear, it's deeper, but it's the undercut and it held, right? So we're kind of in this is in on this linear scale. You've got all these levels here. You're in a volume pocket, so it wouldn't be surprising if it does come down to visit this. But if the space, you have to watch all of these ETFs. Obviously, they correlate high. Again, this low here right now is set at $37 even, which is like a crazy. I think this number looks exactly the same, right? What is that? 36.50. So we're at this level, but there's not a lot of volume support. So when you get this big, when you have moves like this, they don't get a chance to build support, right? So this is where you've built support. So these become levels that are important, and you'll see it in the volume profile. Well, it wiped all of that out. This is a stop. This is a big time stop hunt right here. Some longer term people probably said, all right, well, I'm putting my stop below this low here and I'm done if I'm out. So now, it starts to come down here. Is where we're going to be looking next on URNM. Um, I'm sure that I could put some sort of Wyckoff thing here and it would look similar to URA. I use URA as my proxy for the space. I do so because that is where the liquidity is. That is where the institutional money will flow to if it decides to flow. That is where the institutional money will flow out of if it decides to flow out of. URNM, URNJ do not have the liquidity. They do not. They're not as attractive to larger money. Larger money needs liquidity first. It's much more difficult to get that in URNM and URNJ as it is in URA. Yes, URA is not a pure play on the miners. I get it. All right. So good weekly bounce, good daily bounce. Daily hot. This daily low is set at $37 even. That's what we have to look at. And I've been saying over and over for the past while now. What's important for us is the 4-hour chart. Okay, the 4-hour chart needs to change trends and start moving in a different direction. This is a positive look in that there will be buyers that are stepping in on this capitulation type move. We just have to know, are they going to hold? Take this level out, and you're probably going to run some stops again. So we have to see what goes on there. All right. So the 4-hour charts in the space, in my opinion, are the most important charts to be watching short term for anybody who's trying to be a bottom picker. Not even URNJ is going to look very, very similar to. I haven't even looked at URNJ. URNJ is going to look similar to URNM. And yeah, it's the same type of deal, right? So, but this thing, URNJ has just gotten destroyed. And fairly glad that I got stopped out up here. Pretty glad about that, but my entries were down here, but I'm fine with it, URNJ is more of a trader for me. It's going to be more of a swing trader. URNM is a little bit more of a longer term swinger trade for me, and URA is the place that I'm trying to be much more longer term focused. That's just kind of the way I'm playing the ETFs in the sector. So much more of a trader for me on URNJ. Let's just see what log looks like. And logarithmic and linear kind of looks similar on the fibs, but I mean that's what we're looking at here. So URNJ is taking an absolute smackdown. So that's the deal. URA to me is more and more starting to look like weekly distribution, confirming on a Wyckoff level. So, take that how you want to take it. Over and out.